Most traders wake up every single morning trying to predict where the market is going to move. And that is exactly why they keep losing. You see, the traditional way to find daily bias forces you to marry a direction before the market even opens. And more often than not, price completely flips on you. This video is going to be a full in-depth breakdown of how I find daily bias when I trade and how I reframe the old way to actually using logic to find out where price is actually going to go. So that being said, let's get into it. Now, the first step is going to be identifying your higher time frame trend. Now, this is the first thing I want you guys to do before even looking at the lower time frame is just to zoom out and look at where the market is trending. This is pretty much the foundation of everything, and without this, you will have no idea what to do with all the other steps in this video. The majority of beginner traders fall into this trap where they just literally sit on the 1 minute to 5 minute time frame and wait for their entry model to present itself. And what is so important is that you guys actually understand the higher time frame picture and align that with the lower time frame. Because if you were just to jump straight into your entry immediately, the majority of the time you are going to get stopped out. Now let me show you guys how to identify this on the charts. All right, guys, here we have the NASDAQ pulled up and I am on the 4-hour time frame. You want to be identifying like your daily trend, your higher time frame trend on that 4-hour to daily time frame. And this is the first step, and it is a very, very simple step, and it's literally just understanding, are we in an uptrend or are we in a downtrend? Now, if you can't answer this, right, if you just do not know whether or not we're in an uptrend or downtrend, a way to kind of easily see that is by going up here and instead of having this on candles, to have it on a line chart. And here you can clearly see that the market is making lower highs and lower lows. And that identifies what? A downtrend. So a downtrend, and we can just write this out here, lower highs and lower lows. So as you can see, the start of the downtrend happened right here, right? Where we had a high put in place. We then had a low. We then had a lower high. We then had a lower low. We then had a lower high, and then a lower low down here, and then a lower high. And then you see how these lows keep breaking past those previous lows. This is an indication of a downtrend, right? We keep breaking past these lows. We keep breaking past these lows. We keep breaking past these lows. And this is very clearly showing that price is moving lower in a downtrend. And this is just that first step to really understand where the higher time frame is going. Now, this first step isn't just the end all be all to your bias. Why? Because we are trading on the 1 minute to 5 minute time frame, meaning what? We need to be also trading the rebalance of the range. A lot of the times the market can open, for example, on Thursday of last week, we ended up having a pretty bullish day. If we go down to like the 15-minute time frame, Thursday was pretty bullish, right? And just because the higher time frame is in a downtrend, that doesn't necessarily mean that I'm going to be shorting, right? Because we are rebalancing the range right here, which is what we do in downtrends. We have rebalances of ranges and then we have distributions of ranges. But it's really good to understand where we are on the higher time frame, right? Are we rebalancing the range, or are we going towards these lows, and are we looking to break past these recent lows? Now, if we just go back a little bit in this chart, you can clearly see that this is an uptrend right here. Why? Because the market is clearly making higher lows and higher highs. We are breaking past these previous highs here, and we are clearly distributing above. So this is a very clear sign that the market is going up. And I know this is very, very simple, but this is super, super important. And this is the best first step that you guys need to be doing on your charts when understanding the higher time frame daily bias. Now, this first step alone is going to filter out a lot of the low quality trades that you guys are probably taking. But knowing that trend is really only the first layer. What I'm going to show you next is how to identify where price is delivering from. And this is where the majority of people get faked out. So step number 2 in finding your daily bias is identifying where price is delivering from. Now, here's the thing with finding daily bias is that the market doesn't just move randomly. The market is always reacting off of some sort of level. And it is your job as a trader to identify that level. And if you don't know where price is delivering from, you can't form a conditional bias for you to actually execute on. Now, what do I exactly mean by delivering from? The market is either delivering from sell side liquidity or buy side liquidity. For example, if price ends up taking out previous day low, and then you see the market start pushing up, then that means that we are delivering from sell side liquidity. And this is really, really important that you understand where we are delivering from to find your overall bias. Because if not, then you're going to try to target that sell side liquidity, but we already swept out previous day low and we are delivering up. Or for example, we sweep out previous day high, buy side liquidity, and we are now delivering lower. You should try to be on side of that trend because again, the market should not go up now because we already took out that buy side liquidity. And this one simple step stops you from targeting protected highs and lows and literally forces you to target unprotected lows and highs in the market, which is going to be so crucial for those big moves. Because at the end of the day, the market is not going to seek out liquidity in stops that have already been taken. The market is hunting liquidity, so the market can use that as fuel for the next move. Now, let me show you what this means exactly on the charts. Now, if we just look at the charts here, right, you see that we clearly have this big bearish candle on the hourly time frame, and I want you guys to use the 15-minute time frame and above. So the 15-minute, the 30-minute, the 1 hour, the 4 hour, the daily, the weekly, all those time frames are going to be great when identifying where we are delivering from. Now, you want to see what actually started this move. And this is what I call sponsorship. And it is so important for identifying your bias and seeing where we are delivering from, whether that's buy side liquidity or sell side liquidity. Now you see here that we can mark out this high right here. And if you guys are trading NQ, you also should be looking at ES. It's very, very important, because if we look at ES ended up taking out this high. So this is a sign of what? A bearish SMT, because ES ended up taking out this high. But if we look at the NASDAQ, it did not. And this is a divergence in assets. It's really, really important that you guys know what this means. So we are delivering from buy side liquidity, right? Because ES ended up sweeping out this high. So price is moving from buy side liquidity. Now, why do you need to know this, you may ask? Well, now we know that the market doesn't need to go back up for this high, and the market is probably not going to be bullish on this day because we already swept out liquidity, right? As you can clearly see, ES swept out these highs and we are now delivering lower. So the market is showing a downtrend here, and the market is going to target unprotected lows here, not protected highs. And this liquidity sweep is only confirmed when you see proper displacement like this from the high. Now, if we take a look at the market here, where are we delivering from? Well, if we look to the left of us, you can clearly see that we have sell side liquidity resting right here. And we did end up sweeping that out, and we started getting that displacement up. So here we are delivering from sell side liquidity, and the market is clearly displacing up. So knowing this, we are probably not going to want to target this low again. Why? Because the market is seeing this as a protected low now. And we are going to want to target what? Unprotected highs. Now you need a little bit more confirmation, and I'm going to show you guys that in the next couple of steps here on how you can actually confirm this. But again, this is that second really crucial step that you guys need to know for finding your daily bias. But that being said, let's get into the third step. All right, now step number 3 is to determine which fair value gaps are getting respected versus disrespected. Now, this is going to be the step that actually confirms your direction and bias. Now, I know this has happened to you guys where you'll see liquidity get swept and then you will immediately enter without getting any sort of confirmation. And then the market will continue running even after liquidity has gotten swept. Well, this is why it is so important to actually wait for fair value gaps to get disrespected before entering on the higher time frame. The same way we trade inversion fair value gaps as our entry model on the lower time frame, we want to be using that concept on the higher time frame because price is fractal, meaning what happens on the lower time frame happens on the higher time frame and vice versa. So let's go on the charts now, and I'll show you guys the framework that I use aligning these liquidity concepts with fair value gaps to really hammer in my bias. So looking at the market here, right, you see that we swept out sell side liquidity, and then what are we doing with these bearish fair value gaps? Well, let's just mark out the bearish fair value gaps that ended up taking out this sell side liquidity here. You can see we have this bearish fair value gap, and we just completely ran through it. We disrespected it. We can mark out these fair value gaps here. What are we doing with these? We are just disrespecting them, right? We are running through them. And then what are we doing with these bullish fair value gaps? Well, if we mark out this bullish fair value gap here, we are clearly respecting this gap and we are delivering higher from it. So this is a bullish scenario, meaning what? Bearish fair value gaps are getting disrespected while bullish fair value gaps are getting respected. And if we add in the last concept that we used, which was liquidity, and what is the market delivering from? Sell side liquidity. And really just these two things alone is really, really helpful for you guys to find your bias. If we are delivering from sell side liquidity and we are disrespecting bearish gaps and we are respecting bullish, then this is a sign in bullish order flow and a bullish bias. Now let me show you guys what a bearish example in this case would look like. Now if we go back to this example here on this day, you can see that we are delivering from this high and we are disrespecting these bullish fair value gaps, right? If we mark this out here, we are not respecting it whatsoever. We are having bodies that are closing through it, versus if we mark out the bearish gap in this leg, this gap is getting respected, and the intermediate high resting inside of this gap is getting respected as well. And an intermediate high is simply a high resting within a gap. And if we play out price a little bit here, we end up creating a bearish fair value gap. And what does the market do with this bearish fair value gap? It respects it. It trades into it, and it trades into this range, and then we start getting that delivery lower. So this is enough confirmation for price to now seek lower prices. And how do you actually know when a gap is getting disrespected, right? Let's say the market is currently here. Well, if the candle is here, there is really no clear direction at this very moment because we are still inside of this bullish gap. Now, what I like to do when we're inside of these big ranges like this is I would mark out the swing low to the swing high of this range and see if we have any displacement past this range, right? The market will typically react off of equilibrium of these ranges if we are going to be bullish, right? And we will hit it, and then we will start getting that displacement back up, and then you can say, okay, the market is clearly respecting bullish in this scenario. And we can check this out on like the hourly time frame, right? This is a very clear hourly gap that we have right here. And if we displace through this, then what can we expect for the market to then go lower? And you can see here, we're on the hourly time frame and we are just running through equilibrium of this range. Now for even more confirmation, right, you can go down to like the 15-minute time frame and you can see that we start trading into these gaps right here. And these gaps are getting respected on the bearish side. So again, even more confirmation that the market is going lower. Now this brings us to step 4, which is identifying higher time frame liquidity draws. Now this is where you set your targets for the day, because without this, you're going to be trading completely blind. Now this is where you could mess up if you make 2 critical mistakes here. One being you're marking way too many levels, and this is just going to lead to you being completely overwhelmed on the charts. You need to have 1 to 3 max really daily objectives on the day that you want to see get hit, and take trades towards that, because those higher time frame draws and lows and highs within the market will act as magnets. Even if you're trading on the 1 minute to 5 minute time frame and you're not really necessarily targeting those highs and lows, it's still really important to still have them marked out so you know where the market is overall going towards. So if we look at this chart here, you can clearly see that we are delivering lower, right? You can clearly see that we are disrespecting bullish and we are respecting bearish gaps here, and we are delivering from buy side. And the 4th step here is going to be to draw out your lows in the market. You do not want to be drawing out more highs, highs up here, because these are really insignificant. You want to just be paying attention to now the lows that we are going towards. If we're just looking, where's the most obvious low that the market is probably going to hit in this scenario? Well, it's probably going for this swing low here. And then if we just look a little bit more to the left of us, we also have this swing low here on the 4-hour time frame. Okay, so knowing this, right, we can just draw this out and we can put sell side liquidity, and then we draw out the other low here and we can just write sell side liquidity. And these will be like the 2 main draws that I want to see get hit on the day. It's about 200 points away. And if we have a pretty large expansion move in this day, then 200 points should get hit no problem. And again, these lows must be aligned with the trend and with the overall bias that you are forming. And with that, the best real targets are going to be lows that haven't swept out other lows. So for example, here we have this low, and did it sweep out this previous low here? No, this is a failure swing, and this is going to be those relatively equal lows. And this is a great draw on liquidity to have. And if we play out this day here, you can clearly see that we did end up delivering lower and sweeping out all of these lows. And we can just keep doing this, right? If we go on the 1-hour time frame now, right, we still haven't really gotten much delivery higher. We still haven't disrespected bullish gaps in this range, and we can keep doing this, right, until the bias has flipped and until we start seeing bullish gaps getting disrespected. But what are we doing with these bullish gaps? We are clearly still disrespecting them, and these bearish gaps are still pretty much getting respected for the most part. And again, we can now just keep marking out these lows here. We have this low right here in the market, and we can mark out this low here, and you can see that just because we are respecting these gaps, the market is now going to deliver to this low. Now I'm going to walk you guys through my 5th and final step for finding bias, which is going to be using if-then statements. And I'm going to show you guys an example of some biases that I've sent out to my Discord so you guys can get a clear understanding of how to put all of these concepts together. Now this step is really going to be the step that ties everything together, and it's the reason I made this video. Because most traders hear daily bias and then they just wake up and they pick a direction pre-market and they stick with that the whole entire day. But that is the exact reason why most traders are held back. And the new way I use bias is understanding that bias is conditional. Meaning it's not just something that you guess or you predict. I would honestly say it's a mix of both. It's a mix of predicting, coming into the day, and leaning some sort of way. Now, my favorite time frames to set conditions on is like the hourly and 15-minute time frame. And we can give ourselves conditions with literally just fair value gaps. So a condition could be, okay, if this fair value gap continues to get respected, meaning, the wicks are wicking through it, the bodies are not closing above it, then I will continue being bearish and I will continue to target, swing lows resting here. We can continue targeting these lows and any recent lows that we have right here. And as you can see, this respects it, and then we start trading lower. And then we open up another hourly bearish gap here. And we can keep setting ourselves up these conditions where if the bias is going to be bearish, then this gap should get respected. And what do we do with this gap? Well, we ended up delivering through it. So now we give ourselves these if-then statements, right? And we can go and see, what did price just do? Well, if we go on the weekly time frame, you see that we did sweep out a weekly low right here. So we are delivering from weekly sell side liquidity. And now we're doing what with these hourly gaps? We are delivering through them. And these are these if-then statements where if price is going to be bullish, then these gaps should get respected, and then these bearish gaps should get disrespected. And now let me show you guys some examples of some daily biases that I sent out to my Discord so you guys can get a clear understanding of how to tie in all of these concepts. All right, so if we just look at this on the chart right here, right, I said good morning, bullish bias coming to the morning. We swept out previous day low, right? So the first step of identifying the bias is just understanding where are we delivering from. We are delivering from sell side liquidity. liquidity, right? Previous day low. And the intermediate low inside of this daily BISI, which is just a bullish gap. And we're currently displacing higher. Now, I then said if we get this 15-minute and hourly change in state of delivery, which is just these gaps getting really disrespected, then we can expect data highs, London highs, this recent buy side here as all obvious draws that I'd want to see in AM get hit. And as you can see here, after sweeping out previous day low, we end up delivering through all these bearish gaps in this leg, getting that displacement up. We got a change in state of delivery, which is just a series of down close candles. If we get a closure above that series of down close candles that swept out this liquidity here, then this is your change in state of delivery. But if you guys want to put it in a more simpler way, we again are just delivering through these bearish gaps. And where do we then go? This buy side liquidity above us. All right, now let me show you guys a bearish example. So here I said bearish buys coming into the day. We are respecting this 1 hour unicorn, which is just a breaker block and a for rally gap, right? But simply put, we are respecting this bearish for rally gap here. We're in bearish order flow on the higher time frame. So on the higher time frame, we have a downtrend, and I'm looking to see us have an open high-low close at 9:30. So just price to go higher, sweeping out this 15-minute intermediate high, trading into this gap, and then us to trade lower, generating this trend line on the lower time frame. These are great draws. And then I said these stacked lows at blah 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 are the draw on liquidity today. If we disrespect the 1 hour, then expect the 4 hour unfilled. And this is those if then statements, right? So I'm always going to be leaning some sort of way. So for in this example, I'm leaning bearish, but let's say price does start disrespecting this 1 hour gap and we start displacing higher with massive speed. I'm not going to stick to that bearish bias, right? That would be stupid of me to do. So it's really important that you guys just don't marry a bias every single time and let the market show you its direction. But at the time I sent this out, it's 9:17. The market is very clearly showing me that it wants to go lower. And these are the stacked lows right here. As you can clearly see, these are great draws on liquidity to have, great targets because these are lows that haven't swept out other lows. And as you see here, we are delivering from what? Buy side liquidity being Asia highs. And you see these gaps in this range, these are getting disrespected, and then these gaps here are getting respected. And then these lows down here are going to be a great magnet for price to then go to. And then as you can clearly see, the market then delivered towards these stacked lows. Now I'm going to show you guys an example of a day where I had a neutral bias, and that's just simply if the market is range bound, right? So we are maybe respecting a bullish gap and also respecting a bearish gap. So you're like, what should I do? Well, you simply wait for one side of the range to get ran through. So here I just said neutral bias, right? We're range bound conditions once again. The 4 hours still in that higher time frame sell model. So on the higher time frame, we are leaning more bearish, looking to see if the 9:30 though can juice higher towards previous day high and towards this daily gap. So I said the 1 hour is the current condition, right? I love having 1 hour gaps as conditions, meaning if it is respected and this 1 hour gap gets traded into and it doesn't get closed through and we start getting delivery up, then what could we expect? Then previous day high. Now what happens if this gap gets ran through? Then we can potentially see these relative equal lows here on ES and NQ. Now what did the market do here? Well, we traded into this hourly gap. We end up respecting it. We got that displacement up, and then we ended up targeting that previous day high or this daily fair value gap. And this is just using conditions, right? We are delivering from the sell side here being previous day low. We got displacement up. We are disrespecting this gap here, as you can see if we zoom in, and then we are respecting this gap, and then we have a drawn liquidity above, and we have a clear target being a daily fair value gap. Now I'm going to give you guys another example here of me just like not marrying a bias, right? At the start here, I said bullish until proven bearish because we are at all-time highs. And I'm leaning a little bit more bearish because of Asia session not filling this new week opening gap. So we had a good draw on liquidity down here and running higher towards the recent buy side. Looking to see an Asia Judas New York reversal. Right now we're trading inside of this 30-minute BISI, which is just again this bullish gap. So we're trading inside this. So if this gets disrespected, then I'll be completely bearish towards this new week opening gap. But if this gap continues to get respected, then we could keep seeing recent highs right here, right? So this is the condition. If this gets closed through, this is on the 30-minute time frame, then again, what can we see? Asia lows, this session liquidity, and this new week opening gap as our draw. And if we play out price, what did we do? We closed through this, and then we delivered straight towards Asia lows and this new week opening gap. Now, what I want you guys to be doing also is not just having these conditions when you're coming into the day, but also just throughout the day, right? Let's say you missed this initial short here. If you want price to then be bullish, well, go on like the 50-minute time frame, go on the hourly time frame. And let's say you want to see price be bullish, then go on the 15-minute time frame and mark out some bearish gaps in this leg. And finally, let me show you guys an example of a trade I took on Friday using conditions and using this daily bias method. All right, so we're on the 4-hour time frame right here, right? And what are we doing currently? Well, if we mark out this bullish gap right here, we are respecting this bullish gap. And you can see with these wicks, right, we are wicking into this gap, but we are not showing any signs of price displacing through it. So at this point, I'm going to be bullish until proven wrong, or until this gap gets close through. And then you have to ask yourself, you know, is there a reason for price to go higher at this point? Well, what do we have above us? We do have a 4-hour gap. So this 4-hour fair value gap is going to be a great draw on liquidity to have on the higher time frame, right? That doesn't necessarily mean that on the lower time frame I have to target this, but it's going to be a great magnet to have when we're coming into the day. Now, if we go on like the 1 minute to 5 minute time frame, honestly, this is still great to do when you're trying to find your bias. And I don't want you guys to rely on this lower time frame, but for example, if we have really obvious draws like a data high here, that this is just simply a high that was created from news. This was at 8:30, and this is going to be relative equal highs as well. This is just going to be more confluences to have for that bullish bias. So we can mark out our data highs. We can mark out then the low that we have inside of this bullish gap, and 9:30 ends up opening lower, and then we start getting displacement back up. And what do we do on the 1 minute time frame? We end up disrespecting this gap, and this is now also aligning with our higher time frame, right? What is the higher time frame doing? Well, we are respecting bullish, and we have an unmitigated gap above, so we have a draw on liquidity above us. And then what is the lower time frame doing? Well, we are still respecting bullish, and we are disrespecting bearish. We are disrespecting this gap right here, and we have a beautiful draw on liquidity above us being data highs. So just aligning that higher time frame bias with the lower time frame, and we can set ourselves a really nice trade right here. And this was just an absolute banger trade that I took on this day that I'm sure a lot of you guys took if you just watched the videos that I post on YouTube. And then eventually from here, we did end up going for that 4-hour draw if we just play out price. There it is. So the draw did finally get hit on this day. Then that's why I always preach to just target those 1-to-1s, because you want that low hanging fruit, because days like this could be really choppy and the draw on liquidity could be there. But again, you just simply want to use that as a magnet for price, not for your overall draw on liquidity and target. So all that being said, let me break down what you guys just learned. You first learned how to identify the higher time frame trend, so you're not just trading blind. You then found out where we are delivering from in the market, whether that's sell side liquidity or buy side liquidity. You then found out how to confirm the direction of price by identifying what gaps are getting respected versus disrespected. You then found out how to mark out your draws on liquidity on the day, and finally putting all of these concepts together to form a high quality bias and setting yourself these if-then conditions, so you will never marry a bias again. And if you take this framework and apply it every single day before you even think about placing a trade, you are going to notice a huge change in how you approach your trades and your overall consistency. And this is the same process that's personally helped me see huge results with my trading, as well as hundreds of my students. For example, my boy Fabian requesting his second payout ever just 3 months after joining the mentorship. And my boy Augie, who just got his first payout ever of $2,000 just 3 months after joining the mentorship as well. And if you're ready to stop guessing and start trading with a real system behind you, then click the first link in the description below and apply to join the 1% mentorship. And I'll walk you through everything on how to actually apply the model for yourself and really give you that one-on-one support. And that being said, thank you guys so much for watching this video. Peace out.